Let's crunch some IRS numbers, shall we? To show you how wrong the retirement fearmongers really are when we actually look at the IRS data for income. It's going to be interesting to go through this. So I am a data geek. I love data. It's I don't know why. I always have. Pablo is too. Pablo likes looking at the data, looking out the window. But he and I are going to share this info with you because I think you'll find it of interest. And I guarantee you haven't seen this anyplace else. So the first thing we're going to do is we're going to go to the IRS website, irs.gov, and this is the SOI tax stats, and I'll put a link in the show notes. Individual Income Tax Returns Publication 1304, complete report. This is literally a mecca for data gathering. I love it. So I'm going down here. I'm going to adjusted gross income, exemptions, deductions, and taxation right here, 2017, and we'll save this right here. And this is all returns, sources of income, adjustments, and tax items by size of adjusted gross income. Now, they can even do it for age if you want to look at some other ones as well. I didn't want to go that route because I want to look for specifics, which we can find here, which gives us by the $50,000 to $75,000 breakpoint. So basically, this is the biggest group of the biggest cohort of taxpayers by far. 21 million filers who have AGI of $50,000 and $75,000. 21 million filers. No one else even comes close. The 100 to 200, 100 under 200 comes close. That's about $1 million off, but that's $100,000 between the two. We're just talking $50,000 to $75,000. So this is by far and away the biggest cohort of tax filers. It's middle class right here. All right, so we got 21 million returns, and they filed $1.3 billion of total income. All right, now total income, again, is just going to be AGI, essentially. So they got 21 billion, $1.3 trillion of income on 21 million returns, which is an average about $61,000. And I think that's important because we are eliminating it. We're not just using averages with Bill Gates and old Josh. We're using averages for this very narrow cohort of $50,000 to $75,000. There's reasons for this. All right, so we're going to look at salaries and wages. I'm not really all that concerned with that. Taxable interest is interesting to me. It's $5 billion. That's interest, but you got 606 million returns. So if you got 6.6 million returns, you get $5 billion in. Hold on a second. That's going to be 608. So it's about, what's that? It's 5 billion. Yeah, 5 billion in return. 5 billion. Hold on just a second. It's 5 billion divided by 6 million. 608. So your taxable interest is about $875. Just not a huge amount. So I'm not going to work. I mean, that's on average. So we're not looking at that. There's something specific I'm actually looking at. Tax exempt interest is about the same thing, roughly $1,000 or so. I'm not all that interested in that. Ordinary dividends, I am somewhat interested. I'm interested in qualified dividends as well. So we got qualified dividends, a total of $9 billion. Ordinary dividends of $13 billion. So you got ordinary dividends total of $13 billion, of which $9 million of that is qualified. I don't care that much about alimony, but I do care a little bit about capital gain. We'll get in that here in just a little bit. Sale of capital assets on Schedule D. All right, so you got two capital gains here. You got capital gain distributions reported on 1040, and then you got Schedule D. So if we look at our right capital, all right, well, Schedule D, if we go to, hold on a second, we go to taxes. All right, oops, we're going to go to taxes here. I think we're going to go to taxes here. Here we go, it's thinking. And we're going to go to Schedule D, which is this guy right there. All right, Schedule D is where you got your short-term and you got your long-term capital gains. All right, so long-term is part 2, short-term is part 1. And that's so they're talking about two different things. Here they're talking about capital gain distributions reported on 1040, which I think is your mutual fund, what they give you for a mutual fund. And then they got your own 1040 when you sell your shares, or vice versa, something like that. But both these are combined, so you have to add these two up here. So you had, what's that, $15 billion in total capital gains, which is interesting to me. And then you got taxable net loss, sale of property. But here's the big one. IRA distributions. We got 2.4 million taxpayers who filed IRA distributions. All right, now the vast majority of those are going to be people over 59.5. So we're going to assume the vast majority of these are retirees. 2.4 million people have IRA distributions. The reason we're going to assume the vast majority are retirees, because if we look over here, the number of Social Security filers, we'll see Social Security benefits, 4.3 are people filing for Social Security. Now, the vast majority of those we're going to assume is for retirement and spousal or survivor benefits, i.e., retirees as well. We can't prove that, but I would suggest as highly, if you look at SSA.gov, the vast majority of Social Security beneficiaries are retirees, spouses, and survivors. All right. Now, OASDI is old age, survivor, and disability income. So there are a lot of disability people here, that's for sure. But we're going to assume the vast majority of these are retirees. All right. That's a safe assumption. On top of that, if we go down here, we can see the amount of people who are taking early distributions off their IRAs was not very much. Let's see. Hold on a second. Penalty on early withdrawal savings, about 51,000 people. So of the 2 odd million people who filed for IRA distributions, 51,000 were under the age of 59.5, it appears to me. So not a huge amount of people, not significant enough. So we got 2 million people with IRA distributions and 4 million people filing for Social Security. So it's safe to say, in my opinion, of those $21 million, 21 million taxpayers in this cohort, about a quarter of them, roughly 4 million, that's right, buddy, are Social Security age, i.e. retired. And of those 4 million, half of them are also getting IRA distributions. Does that make sense? Now, the interesting thing is, watch this. If we go to pensions, you'll see the average pension here. If I may find out where it is. Ooh, buddy, you're not very comfortable. He just needs his dad. He needs his daddy. He said, "Dad, give me a hug." All right, so we'll see to the pensions here, right here. 5 million people filed for pension, which is more than Social Security and over 2.5 times more than the number of IRA retirees. I thought that was of interest because obviously you don't have to be filing for Social Security in which to get a pension. You could be under the age of 50, for instance, if you're military or something like that, or a policeman or something. But I just found that was interesting. So we have 5 million people with a pension, 2.5 million people with the IRA, and we have 4 million people with Social Security. Now, if you add all these up, we got pensions, IRA distributions, and Social Security. You get a total income of $66,000 if you add all those up, divided by the number of taxpayers. Now, obviously, a good amount of people aren't going to have pensions. A good amount of people aren't going to have Social Security. But between this cohort of 50 to 75,000 people, the average person here who has an IRA, a pension, and or a Social Security is going to have $66,000 of total income. But remember, that's not your taxable income because you have to do provisional income. And when you factor in 14,000 from IRA, so the average IRA distribution is 14,000. 31,000 is the average pension distribution, and 21,000 is your average Social Security. All right, so if you factor all that in, you only have $55,000 of taxable income because you only have to pay tax on about half of your Social Security benefit. That's a little bit more than that. You had to pay tax on, I think, on 15,000 of your total Social Security benefit. Either way, your total gross income is right at essentially your total adjusted gross income. No, not your adjusted gross income. Your total gross income is 66,000, but your total AGI, because of provisional income rules when it comes to Social Security, was about 60,000, right about $60,000, which is spot on where the average person in this whole cohort is. All right, but then you take your standard deductions, and you only got about $39,000 of taxable income, which is interesting to me. So if we look at this, we have 39,000 because again, this is before the Trump tax bill, by the way. So we can look at our taxable income. Social Security benefits, talked about that. Other income, net operating loss. Hold on, taxable health insurance distributions. Total. Hold on, just a second. Keep on coming down here. And alimony paid, IRA payments, student tuition, student loans, foreign, blah blah blah. Standard deduction. So we got a basic standard deduction is right there. You can see 128 million or was that $1 billion of standard deductions on 13,000 taxpayers. Additional standard deduction, basically personal exemption, because it's before the Trump tax bill. You got itemized deductions, exemptions we got right here. All right, so now our taxable income is right here. We have $838 billion of taxable income divided by how many taxpayers? 21 million roughly taxpayers. So the average taxable income is about $40,000. Now, why is that important? Now, if you keep going over here, income tax so we have the average tax. The average AGI is 61,000. The average taxable income is 39,000. That is important because if we scroll over here to qualified dividends and long-term capital gains, well, you are still well within the 12% tax category. So right here, the vast majority of these are going to be tax-free. The vast majority of these are going to be tax-free simply because you're still in the 10 to 12% tax bracket. The vast majority of qualified dividends are also going to be tax-free for the same reason as before. I can't remember which that qualified dividends are. But essentially, these people got $1.3 billion, about $15 billion essentially, which is not taxable for capital gains because they're still in the 12% tax bracket. Remember, the 12% tax bracket, you got to hit $77,000 of taxable income, So basically $105,000 of gross income before you're in the 22% bracket, which means that is before you have any taxes on your long-term capital gains or qualified dividends. I hope that makes sense. That's a big deal, my friends. That is a big deal. Here's your qualified dividends. So we got $9 billion of qualified dividends and another $15 billion of long-term capital gains, essentially, which are tax-free to this cohort. So the question is, when people are running data, are they using it based on AGI or are they using it based on taxable income? So if we go back to Right Capital and we look at the 1040, now in this case, I got a guy with $35,000 of capital gains, 35,000 long-term capital gains, 4,000 of short-term capital gains. That's all the income he has. I'm just using it for an example. We're going to look at his 1040. Let me make sure. Oh, good boy. And if you look at his 1040, the only income he has is AGI of $40,000 as his AGI, because essentially it's going to be his taxable, his capital gains. But with a standard deduction, he has $13,984 of taxable income, yet he pays no tax. Why? Because those capital gains long-term were tax-free. You see, so the question is, if you're only looking at taxable income or taxes paid, you're saying, oh, this guy doesn't have that much money. But he does. He had $41,000 of income, of which he only had $13,984 of taxable income after standard deduction, of which he had zero of tax. So when people are saying people are living in poverty and whatnot, what are they basing it on? Are they basing it on taxable income or total tax paid? Because if you say total tax paid, there is no tax paid here. If you say taxable income, he looks like he's a pauper when he's living on $41,000. You got to figure out from where they're determining the lack of money that they're always trying to scare you. They're saying, oh, everyone's poor. Why? Because they got no taxes. They haven't had to pay any tax. Yeah, because they're in the 12% tax bracket. Hope this helps. Lots of great data on the IRS website, man. I could look at this stuff all day long. It's like Christmas every single day for me to look at this, which is concerning because I can get into it too much. I have other things to do. So hope you find this helpful. We'll see you next time.